I should have messed up his name to do him some justice over there. But today
They do it all the time. It's fine. Go ahead.
Yeah, the rude cow over there. So what we're going to talk about today is we have got some of the financial news going on. So we have U.S. leading economic indicators crashed by most in over 60 years. And so, of course, it's always bad news is good news. So the more bad news there is, it means that now, the stock market thinks they're going to get more free money. The they, them, those, the power structure, the big banks are the ones who get more money throughout all this. And so, even though there's all this terrible news, we do see the stock market has been taken off. But, we do see these leading indicators are leading to, a sign that there's not good things, good things to come. Now, another thing that many investors are feeling right now is that they are trapped into their company's 401ks because inside the 401k, they have very, very few options that they can invest in. Usually there's like 15 different options. A lot of times people will pick out like a target date fund, which, they'll be if you're going to, let's say retire in 30 years, you might be in a 2050 fund or a 2045 fund, or, you're going to be like in the S&P 500 or large cap or small cap. And, you get very few kind of plain Jane vanilla type options that are in your company's 401k plan. And so right now investors are feeling a little bit trapped inside their own, company pensions, so to speak. So what once looked like a diversified portfolio has in many cases become an investor's nightmare due to the loss of diversification in what is now a highly centralized socialist system. I mean, I'd argue it might be a little bit more fascism, but that's, kind of splitting the hairs and some semantics over there. But within the fiat system, diversification is now dead. And basically, and I will say that whenever there is a major crisis, and this is something I was saying before this whole crisis, that essentially a lot of the diversification ends up going down to essentially zero. Because what ends up happening, or I guess one, because what happens is everything basically becomes highly correlated and they all go down together. Now, in 2008, the bond yields went down, which means that the bonds increased in value. So what happens there is as it sort of works like a teeter-totter. So if rates end up going up, then the underlying value of bonds go down, vice versa. Now this is a different situation with the bond rates already basically at zero. There was no way where for people to run. And so pretty much the only things that went up, this year were basically, like gold. I think year over year, year to date, at least Bitcoin is up. And then if you had put options, and those are three of the main things that I was talking about. Luke and I, unfortunately, we started doing this right after things were going down, but I'm on video going back to October 3rd, 2018, talking about that put option strategy. But if you are locked in at 401k right now, or you have an old 401k, there are options. You can roll those over to IRAs. There's no taxes that are due. If you're over 55, maybe 60, it's kind of a company by company deal if they have this or not. There's something that you might be able to do. It's called an in-service withdrawal. And so what an in-service withdrawal allows you to do is effectively, take your IRA while you're still working at a company and then move it, your 401k at a company and then move it to your own IRA. Now, that's on a company by company basis and not all companies allow it. I'd say the bigger the company, the greater the odds. The older you are, the greater the odds. But if you're with a big company and you're 60 years old, there's probably a pretty good chance that you do have that ability. So it is one thing, and hardly anybody even knows that that's even a thing. Even, I guess we're in even
family-friendly show. Illuminati,
the HR. A lot of times, even the HR people don't even know that this exists. So, what you could do, not to make a quick shameless plug, but you see, the number down below, or go to my website, thelibertyadvisor.com.
Shameless plug by Tim. Who would have thought? No.
Who would have thought? I'm just showing. We're not making any money on YouTube, and the only way to be able to hire more people and get more research and to get, better things over here is to have people who are coming on board. Because my grandma the other day was like, "Oh, so you're making all these videos, but are you making any money?" I'm like, "Yeah, grandma." Like people don't understand how. But first off, I should be thankful we got all the masks. And before you start busting my balls about, what we're doing over here, making money. But yes, grandma, we are, and that's how we're able to do this. And so it's a win-win-win. So, we helped a lot of people. We only went down 5%, actually 3.5% to 5% during the worst of it. And last year made most of the money. So, sorry, not sorry that we would have helped out a lot of people. Now, continuing along in that same vein, the market is now just 5 stocks. The S&P now more concentrated than ever, mainly just in the top 5 names. And the ratio of the tech and buyback heavy NASDAQ to the small cap and cash flow zero, Russell had hit a level not seen since the great depths of the dot-com bubble. And so we're seeing, let me just kind of scroll down the screen. I think I remember seeing this from yesterday when I was reading this. But yeah, we see this chart over here. It's pretty telling over here. And you see that, this concentration of just, the big mega tech oligarchs over there is really, quite staggering. So of course we've got Microsoft with Bill Gates, who's trying to get, vaccine chips into everybody. And of course we've got, Apple, which is, trying to do contact tracing along with potentially Alphabet. And then Amazon, we don't need to get into all the stuff that Jeff Bezos is up to. And then Zuckerberg, who, wants us all to be basically in the Matrix wearing, VR goggles and not interacting with anybody while telling us what is and isn't fake news. Now we also have a bad global precedent. The Chinese GDP has collapsed more than expected, worse since at least 1992. But actually, let me go back to that last article because I don't think I'm fully done with that.
Now, this is interesting, especially when you look at the Chinese market, because they're allegedly saying that their kind of retraction isn't as big as expected by other people. But again, the Chinese aren't always honest about their economic numbers or honest just about anything in general, especially with the latest kind of sickness that's going on here. So what do you think are the kind of bigger ramifications for China? Because again, China's markets are also just as fake as the American ones. They're all in real estate.
Even more fake.
Yeah. They're all in these like fake cities that were literally propped up. No one's living in them. And they keep building these empty cities, hoping that people from the farmland come in. The people from the farmland are not coming in for their, big brother Orwellian control grid society.
Well, at least they bought something. I mean, in the USSA over here, all we do is we get a bunch of debt and we just get further and further into debt and we don't build anything. So at least if everyone's going to go bankrupt, I mean, the only 4D, 5D chess I can basically.
But Tim, it's made in China. It literally falls apart. Like all the buildings that they built, and they know no one's going to be living in them. They're unlivable. They look great on the outside, but there's actually a lot of investigative pieces showing how they're just crumbling. They could collapse. There's a lot of building collapses in China because of just people cutting corners trying to make money. And it goes along with the saying, made in China. I don't know what the saying is, but when it's made in China, you say not usually the best quality because it's slave labor. So sorry, go ahead.
Okay, thank you for the analysis of made in China. But yeah, I mean, China's their shadow banking system and everything they got going on there makes is way more even corrupt than the already super corrupt system we have over here. We also see global stocks surge on reports pharmaceutical giant Gilead is making progress on a drug treatment for a coronavirus, and so who knows. For the first time ever, the Fed will monetize double the total treasury issuance. And so we see here the Fed is nationalizing or privatizing, depending on whether one's view of the Fed is public or private, which actually it is. I mean, it is a private bank, but they've got the monopoly power behind, basically having the government and people with guns coming to kill you if you don't want to, use their dollar, which is why I have the sign behind me that shows King's Ransom. But yeah, the current pace of weekly treasury purchases is simply staggering, unparalleled by anything seen before in history. I mean, just look at this chart. I mean, I'm not sure if Luke, I can't see it because he's, I'm not sharing it through Zoom, but if he's watching the screen, I mean, this is ridiculous. It's sort of like it basically sort of mirrors that unemployment, complete hockey stick up that we have seen. And if Nicole, if you can also go into the comments too, and just be ready for after we get done with these articles, we'll take probably a couple minutes of questions before I head over to do a video with Josh. But yeah, I mean, essentially, we were told, and I forgot what year it was like maybe 2009 or 10. I remember Osama Ben Bernanke was up getting grilled on Capitol Hill, and he said, we will never monetize the debt. And here it is, complete monetization of the debt. I did talk about it. If you guys go to my channel, I have underneath speeches, it's my Anarchapulco talk, and a part of it is I actually prove how they were monetizing it at the time, because what they do is what was happening is, and I'm trying to get this straight in my head right now because it's complicated. So you had the Treasury was essentially in their primary markets was issuing bonds to the big banks. So let's say it's like Bank of America, JP Morgan, all the big guys. And so then what they would do is when that cash would then settle like a couple days later, 2 or 3 days later, then the Federal Reserve would then come in and then buy those bonds because they weren't allowed to directly buy the bonds. But that's also a stealth bailout of the banks because, let's say, here, I will buy this from you for $100 and then guaranteed to buy it back from you 2 days later for like $101. So, I mean, if anyone can have that guaranteed and can get that deal, then you would do that deal all day long. And so, it's complete crony capitalism, or, Luke doesn't think this is funny, but my crony capitalism, that's going on. I see him shaking his head over there and he is on screen, so you guys see that as well. we got the Fed is buying $75 billion every day in treasuries, and we are now down to only $30 billion per day. These enormous Fed purchases combined with rates moving sideways in recent weeks makes you wonder where 10-year rates would have been if the Fed had not intervened. And I'll tell you exactly where 10-year rates would have been. So this really all kicked off. I mean, I had a podcast. Unfortunately, I had like 20 people listening to me at the time, but it was called The Perfect Storm is Brewing in May 2018, pinpointing that there's no way the Fed at the time, and if you guys actually back this up, the Fed thought that they could actually get away with selling $50 billion of bonds per month. And I'm like, how the hell do you guys expect to sell $50 billion of bonds a month? Who's going to buy them? The largest buyer of the Federal Reserve bonds has historically been, well, not historically, I mean, at least the past like 5-10 years, has been the Federal Reserve. The second biggest buyer is China. And then the third biggest buyer is Japan, or sometimes second. And so now you're going to have the top two big, I mean, we're in a trade war with China. Then also in terms of the Federal Reserve, so you're going to have the largest buyer now become the largest seller. That's going to make the rates skyrocket. The rates skyrocketing, or then, so you see that I'm not looking at the data right now, but the 10-year Treasury probably went from about 1.1 up to about 3.5% in a very, 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 very short time span. That was October 2018. Then the stock market went down 20%. Then the Federal Reserve basically reneged on every single thing that they said they were going to do. Then we had a great year in 2019, even though the market and earnings per share data was basically the same. And the earnings per share were up a tiny bit. The revenue was about the same. Actually, earnings per share were about the same too, but the market was up. The S&P was up about 30%. Just another quick shameless plug. We were up about 25, 26 last year, except this year we only went down 3.5%, 5%. You guys can hit me up and have a free consultation. And that is limited time only, because we are bringing on other people right now who are going to be the ones who are taking that stuff in the future. So this is not, so right now you are getting me very, very soon. That is not going to be me, except for just the really big potential clients. So that is limited time offer. I'm not joking around when I say that right now. Just like I wasn't joking around 2 years ago when I was giving out free crypto IRAs. And now it costs you a lot more than free, unless you've got enough money with us and it's included. So, people take advantage of these offers. These are not, we're not messing around. And we did, help save a lot of people a lot of money and made a lot of people a lot of money. But the Fed's bond purchase program, closing price gaps in ETF market. This is out of the globeandmail.com. I saw John Sneisen sent me this article. John Sneisen also sent me that one Syracuse article as well, so I want to give a shout out to John. But effectively, the free market is dead now. It's a complete crap that the Fed is able to buy crap, literally junk bonds. The Fed's going in there buying junk bonds. And so what should happen in a free market is these junk bonds should go close down to zero. And then guys who had cash, like myself, or who had put options that we could then trade in for cash, should then be able to come in and buy these assets that got absolutely hammered. And that was sort of the game plan. But now that game plan is being extenuated just because of all of these, basically market manipulations that are going on. And then I forgot this article was next. Cash is king, but you've got to have a way to get cash. And you also have to, not to sit in cash permanently. Because if you sit in cash permanently, and I've been saying this since 2008, that is a good way to essentially go broke safely. And so, nobody wants to go broke safely. Yeah, it might be a good idea to be in cash now. Good idea to be in cash in February. Good idea to be in cash maybe in January. But being in cash long term. Now, if you need to buy a house next year, I wouldn't buy a house, but or if you need to, have some sort of need for money soon, I wouldn't gamble with that. I would keep that in cash. But long term. And speaking of cash is king, actually, the Paycheck Protection Program for small businesses is already out of money. But don't worry, we got plenty of effing money for the big banks and for big pharma and for the military industrial complex. Their money hasn't run out. It's only the money that goes to just the average every day. I haven't seen my paycheck protection thing check come in yet, so I don't know if I'm going to be getting any of that. Already covered this article a little bit in the beginning. Dealing with, basically unintended consequences that we have, my hometown, Syracuse, New York, where effectively they have shut down, Cuomo has shut down all non-elective. They shut down elective surgeries, and that was a big cash cow. People have not been going to the hospitals because they don't want to, that's probably the worst place you can be if you want to catch, anything what's going on. And so they've had to furlough over 500 people. We did cover that in the last video a little bit, so I'm not going to belabor that now. And then the Fed's Bullard proposes way to end the crisis. Just pay all the costs for companies developing the test. So there you go. Just, give Big Pharma more of a bailout, more of a handout. And then that is the answer to, I'll say that in air quotes, the answer to saving everything. We just, give all the big vaccine manufacturers, complete liability protection if they already have, and just, make sure that everything keeps going on hunky dory. Now, this article we did cover before too, but Trump says he would allow some states to reopen tomorrow, aka today. Not sure where that actually went on, but yeah, these other articles we've already covered, and that was all I had. So I don't know if there's any questions that we had down there.
Yeah.